Well, hello again, everybody. This is Matador from freetradingvideos.com. It's still the 15th it's on a Friday. Happy Friday. It's good stuff. So sometimes the market will actually not rally or fail so badly on a Friday. Just people aren't really looking to buy into things or take too many profits unless they're nervous about holding over the weekend. And that may have been what we saw today. But really, if you look at the news, let me just grab this real quick here. You know, after a nice little move up and the sell-off that we saw, I like this quote here, people getting accustomed to the economic news being less bad, but still found little incentive to buy. So again, makes sense on a Friday into all this overhead resistance. So let's take a look at what happened in the markets. Really nice run up, like we talked about, into resistance, sell off to this support area right through here. If I zoom out, you can see where that was exactly, right through here. That corresponds beautifully with this swing low from yesterday, and we've even tested that now. So I would drop a line right there. On the heels of our video yesterday when we talked about shadows, we already know that there was a significant sell-off, popped back up on rising volume, but that would create a long lower shadow on a higher time frame. Let's go look at that. And so there he is. So we can take this line that was drawn in from before, now we can extend this over, and now that would be a time when I would actually pay attention to that lower shadow, since there was some selling that was going on and some pretty good price movement. It wasn't just one blip down there, but I would probably keep my line here and just realize that this is one good test of this support area, and that becomes a perfect gap fill right through here of that area that we had drawn in from yesterday as well. So again, when I say watch out for gaps and how they fill, very often you'll fill the top part and then the lower part with a test that paves the way for future sell-off, and that's why I would want to watch out for very carefully, especially when something in a grand scheme here is putting in, I would say, a mid-sized low base, if you can say that. You know, beautiful run-up, right? Instead of getting excuse me, that's the close. Instead of getting a perfect high base right into the 200 MA, you're getting a bit of a sell-off, and now you're getting this base right below the gap down. And we actually filled this gap from back here. Right, remember that? So that's exactly what we're looking at right here. And so it's kind of fun to have all these technical things work out and then layer on top of that all your relative strength and weakness reads from your own stocks. And kind of be careful about that, because sometimes something that looks like it's selling off dramatically might actually be doing better than the broad markets, and there's a lot of great tricks for that. All right, very good. So that's my run around the markets. One thing we don't want to argue with here is the trend reading. That is massive. Good bit of volume flowing into stocks that are going down. One thing that doesn't quite corroborate, again, like we said, is the TRINQ. That's why the markets didn't absolutely eat it. But they did run up toward 1.0 at this neutral area toward the end of the day. Right, so that kind of helped with the sell-off. And the VIX then broke out dramatically. Remember what we were looking at here intraday? So here's the noon video, and I said be careful if this breaks out. We saw this one bar break out while we were doing that video. I was like, oh boy, here we go. And that's an amazing run. So again, you can't argue with that volatility increase. And very often that will tend to have an effect on the markets, or vice versa, and we'll get that sell-off. So good. Anyway, still in a consolidation. Just watch out for the weekend holdings, and we'll see what happens on Monday. It's going to be fun. So I wanted to do something here like you guys were asking for so nicely, and all your great comments. I picked, of the excellent 18 comments I got, I picked one or two I'm going to talk about. So on the moving averages, just to follow on the heels of that, do I use simple or exponential or front-weighted? And what situations would you use one over the other? So all of my moving averages are simple, except for my shortest one, which is a 13 EMA. It's an exponential moving average. That to me is this purple line. These are the 20, 50, 100, and 200. And the reason I use that is because a great majority of other traders use them as well. And you wouldn't believe how often they're hit or touched or tested, and then you get a reversal out of them. Doesn't mean they can't go blasting through it. Like right here, support, 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 slam. Most likely, if you zoomed in, you'd see a bit of an increase in volume. If not, you realize that the sell-off might not be as dramatic as you thought into support, things like that. So good run up to resistance, round number almost, and you've got the 100 MA coming down. This is just a little 3-minute chart. So you can go back and look at all these things. So that's what I use. And again, the reason I use it is because the great majority of traders use those. If you want to use an exponential moving average, it just simply hugs price action a little bit tighter than a simple moving average. But again, these are sort of just a secondary indicator after you read price well. And that's one thing that people really don't tend to do very well. To be honest, you kind of have to take that apart first and then use these secondary indicators as what they are, for secondary confirmation. So grain of salt, but realize that sometimes they're as important as horizontal lines or even trend lines that I've drawn in. If I've drawn them, other people have as well, and they might not be as motivated to buy into something that's overhead resistance or sell short into something that's underlying support. And so that's how I would use them. Another person had a question. They noticed that I was using TradeStation in here, and he liked the Windows setup. It's really, really frustrating when you can't manipulate a piece of software like you want. So let me just do this real quick for that person, and maybe this helps others as well. But he can't find out how to do my setup basically from the TradeStation help, because you have to sift through a 500-page document. But I click on what looks like quotes window, and up pops a chart analysis window. I also notice that your chart analysis window does not appear to have thick borders. Anyway, I'm trying to know how to click on that and get that to happen. So let's do that real quick. It's a very easy fix. You will like this. First of all, the borders, I need to, if you click on File, you can't see it because I'm taking a 6x800 screen print right now. But if you go to TradeStation and click on File, right there, you'll see a drop-down menu, which you can see just a portion of, and you will want to go to Preferences. Now you can see what I'm looking at, and it's called TradeStation Desktop. So click on that, and you'll see a pop-up window with several tabs across the top. One of them is View, and you can show title bars on windows that are selected above, which is defaulted to all. You can only show the title bar on an active window, so for instance if you click on it, you'll see a title bar, or you can hide all title bars, and that's how I do that. Alright, so I like to get the bezels out, basically, and just hide all title bars. It gives you a whole lot of more space. And the other way to do the linking is you see these little green things here? If these weren't hidden, you would see this. So simply click on that green, and you'll see what they call a green local symbol link, or blue or yellow, or whatever color you want. They also have global. So let's just say you use green or whatever. So click on that. See how they're all green? I made them that way. Over here on this quote window, it's also green. So click on it, you'll see green local symbol link, and now whenever I click on anything, let's say Goldman Sachs or whatever, they all become Goldman Sachs. So now I've got a weekly, a daily, 60, 15, and a 3-minute chart all layered on top of each other in a very nice compact window, and I can go from time frame to time frame very quickly. I can put any kind of lists in here I want. I can put the entire S&P 100, 500 in here. I can sort by, if you see what I have over here, I usually have net change. You can sort by net change if you wanted to find the stocks that are doing the best, or you can do percent change, which is even better because it normalizes it as a function of a percent, and that's pretty fun. The way this looks, let me just show you. If I put all those back, if I put the bezels back on, it looks like this, right there. So it's not a deal killer, and then you do see the S for symbol link, right? And you can choose wherever you want. But again, it just takes up a little bit of space, and I'd rather not use that. One irritating thing is if you don't have these up, you can't drag the window anywhere. You have to actually move it by using the edges. But for me, once you get your window set up nicely, just go to Preferences, TradeStation Desktop, hide all title bars, and you get your life back. Pretty cool. So any hints like that, let me know. I can hook you up big time because I know what frustrating that it can be to get that. So let me know what you think. And again, thanks for all your comments. You guys are awesome. Great week. We'll be doing this forever. and forever's a long time, but this is what I'm doing. So hang in there, everybody, and I'll talk to you soon.